Welcome back, folks. Just a quick little review here. The left-hand chart is the S&P futures contract, the daily chart, and the right-hand is the NASDAQ daily chart. You can see here we did in fact run outside of the imbalance. We did in fact trade up into a Judas swing and trade lower. Look at last night's review and you'll hear that that's what we're looking for. We wanted to see a measure of movement to the upside, which sets up a Judas swing. Okay, so the context is when we're looking for daily bias, is we're looking for a weekly draw on liquidity to frame a buy or sell program. Then individually, each day, we're waiting for power 3 to materialize. In this case, we've been bearish on S&P and NASDAQ. That means the open is going to be near the high, and anything above the opening price would be viewed as a Judas swing. A fake rally to entice traders to chase that going long, and then aggressively trading lower. We have sell side resting in here for the S&P, and over here on the NASDAQ, we had similar delivery and price where we have the open, the Judas swing moving higher above the opening price and then moving lower. Sell side liquidity resting below here. All right, hourly chart here on the left-hand side, S&P. We mentioned this in passing last night. We had the buy side balance, sell side inefficiency, worked up into the top of that range and broke lower. I told you exactly where this shaded area is here. We ended up revisiting that again today, so that kind of like framed the daily high. So the market traded up into that inefficiency, broke lower, shift in market structure, rallies back up. We have a fair value gap in here, and then look at all of the movement beyond that, but the bodies are very close to that shaded area. Now this is one of the signatures I was referring to last night about August. August tends to be a little bit more muddy in the sense that it's not as clean as you would expect to see in other months of the year. There's a small little inefficiency right in here in the form of a fair value gap and or CIBI. So you can mark that on your charts. I'm going to try to keep this area clean as we work through the time frames. And then at the time of the recording here, we're looking at the next sell side liquidity, which is in close proximity to where we are at the time of this recording. On the right-hand side, NASDAQ, okay, we traded up into consequent encouragement on the 15th, broke lower, consequent encouragement of this CIBI here, order block, consequent encouragement of the buy side and balance, sell side efficiency on the hourly chart. Then we have a fair value gap here. Look at the bodies. Okay, this is today's price action. Extend that forward. Okay, this is not your classic support and resistance. To the fellows that like to show up in my comment sections and talk about how this is nothing but support and resistance. Well, if it is just support and resistance and it's this easy, I would love for you to do these things in advance and call it before it happens too. But something tells me that's just not going to happen. But the inefficiency here plus the wicks doing the damage, trading up into the inefficiency, the bearish order block here, but the bodies telling the narrative, meaning that this imbalance, now we have a balanced price range. We go up, down, half, consequent encouragement. We leave it. Hits it like a brick wall, sells off. We have a fair value gap, consequent encouragement of this wick, and 2 up close candles. Lots of indications at that 2 o'clock FOMC minutes, expecting that to be a wonderful sell-off, and then gravitating towards that 14,853.5. That's our expectations going forward. 15-minute time frame, left-hand side S&P. You can see we did in fact trade up into that shaded area as I mentioned last night. I took you into exactly where that occurs. And then price broke lower. We have a shift in market structure. So this movement right here, this is model 2022. Okay, so the mentorship model that I taught in the year 2022 on my YouTube channel here, this is the exact model being delivered here in the afternoon during FOMC minutes. And the market accelerates to the downside, taking out the 44.24 level that I mentioned on YouTube. NASDAQ on the right-hand side. Here's our imbalance or fair value gap. And the Monday, 10 a.m., 60-minute buy side imbalance, sell side inefficiency high and respective low. That's what these levels are here. We traded up into that. Lots of confluence in here. Okay, lots of confluence. And again, the market shows displacement to the downside. Shift in market structure here. Two fair value gaps, just like over here, here and here. You make allowance for price to trade up into the second one. Here we see it actually occur. So we have the inefficiency here, and then this one here. So during FOMC minutes, we trade up into it here for a 15-minute sell side imbalance, buy side inefficiency. Consequent encroachment, half of the gap. Then aggressive sell-off, institutional order flow entry drill, which is a move just above this candle high there. Then sells off, and then again looking for 14,853.5. Finally, moving into the 5-minute chart, you can see here, this is our afternoon PM session, which I was sleeping through, the silver bullet. So we can see it trade up into here and aggressively move lower, attacking that 44.24. And in similar vein here, you don't see the inefficiency so much on the 5-minute once we drop down from 15 to 5, but having those higher time frame PD arrays on your charts is very important. Otherwise, you'll lose yourself in the candlesticks, and it's important not to get lost in price delivery. So we see it trade up into here, breaks lower. Look at the bodies forming inside of the Monday 9:30 a.m. low and the Sunday 11:50 p.m. low. Those two sell side liquidity pools I mentioned this morning at the start of the trading day. And all of this movement here at 9:30, all of this was a Judas swing. Okay, so for the guys that like to comment when I post on Twitter, when I'll say, for instance, when an objective is reached, okay, I'll put like something to the effect like a boom, or there it is, or something to that effect. You draw some kind of emotional stimuli around it, so that way it's meaningful to you. That way you'll go into your journal or your charts and you'll refer to that as a milestone in your observation because you watch something outline in advance, then deliver. So obviously people that say those things that say, oh, well, it only went up, so many handles before going down there. Well, it didn't really go up, 100 handles higher. It went up to go to levels that I had outlined last night. Listen to the outline and analysis I gave you last night. We were looking for a move higher first. Okay, so if you're a student of mine, you know this is the case. When we're looking for a daily bias and we're bearish, we wait for initial delivery that's opposing. That means it's against, it's not in the same direction of where we want to see the market go to. So initially, we want to see some kind of false movement in the opposite direction. That does not scare us. That doesn't make us second guess our analysis. This means that that's exactly what we're looking for. And there's a lot of retail traders that thought that these markets and these levels up here were going to go higher. And it just simply was not going to do so because everything I shared with you last night before the fact. And then without stealing the thunder from the tweets, because I actually called out all the key turning points and where we're going to draw to throughout the morning. And then we actually get it here. So it's important for you to follow me on Twitter. If you don't follow me, at least go and check it out. Look at the tweets and go and pull them up and plot them on your trading view chart. Okay, you can just do a copy of the individual tweets that I send when I'm referring to specific levels. And that way you can right-click your mouse button over top of a chart and then click paste, and the actual tweet that I make a comment about will be attached to the very candlestick at the time that I made the tweet. And then you can judge whether or not there was any visibility there or not. But you have to take the entire understanding and observation and analysis that was given to you last night. We were looking for lower prices. We were looking for where the NASDAQ traded to today. We were looking for where the S&P traded to today. It's undeniable, folks. These things are transferable. You can learn how to do it, but you have to do these types of things every single day to condition your understanding and activate your reticular activating system, where it allows you to see these things that you've been hunting for, and you build an importance. You build an affinity towards these things that were annotating the chart by journaling them. And as a result, the default function of you seeing these things in hindsight and then anticipating them, studying them with a tape reading environment, that means not trading it in a demo. That means not trading it with a funded account challenge, not trying to trade it with live funds. Just simply relaxing and letting the understanding build over time, not be in a rush to try to make money. You can't speed that part up. But the way that becomes easier is for you to go through this part of your growth, which is the longest part. And it's going to be longer than you want it to be. But if you submit to it, you'll get these things. You'll understand what it is that you're expected to see in price. And everything that I'm teaching you is linked to time. Every price run is linked to a time delivery mechanism. Nothing's random. Nothing's just, oh, look at this. Unless something happens on a geopolitical or a war front where, something that would be completely unexpected. And then they would not waste that opportunity either. So hopefully you found this one insightful. Until I talk to you tomorrow, be safe.